Hello. Whether you are a student, a business owner, or just a concerned citizen, understanding financial audited financial reports is very crucial, very important. It may save your company and it also save your investment. Okay. So, what is an audit? An audit is an independent examination of financial records so that you can be able to form an opinion as to whether those financial reports they present true and fair view of a company and whether they have been prepared according to the best international financial reporting standard and according to the Companies Act, classified into two major categories that are mandatory by law. It is required by law to conduct them, and there is no there is no avoiding them, and the prevention is not a mandatory; just done for best practices. Now, there are several types of audits that can be done in an entity. One is financial audit. There is compliance audit, IT and or system audit, forensic audit, or management audit. These are done mostly the financial audit, they are mostly done to ensure that the financial records present true and fair view of a company. Now, the compliance audit, it is mostly done to ensure that the company or the entity is compliant to the rules and the regulation governing the industry. They also done to ensure that maybe if there are some new registration that have been established in the industry, the company is compliant with the IT system. This is mostly done to ensure that the IT, the system that are the internal controls that have been established, they are working according to standard, and if they need upgrade, or maybe they are working according to the way they are expected to work. Management audit. This is mostly done to ensure the suitability of the top management and to ensure that they are competent enough to move the entity to the next level. Now, the forensic audit is done mostly to gather evidence to be used in the court of law, and if there is some instances of fraud, it is basically done to gather evidence for prosecution. This may involve even the police, and there are several types of audit opinions that can be issued by an auditor. An audit opinion is simply a certification of financial record. They are categorized into two categories: modified or unmodified. In an unmodified, it is only one. The unqualified opinion. This is the best opinion that an entity can have. Okay, it shows that the financial records they present true and fair view of the company. They have been prepared according to the best practices, international financial reporting standard, and they will present true fair view of the company, and they are prepared according to the Companies Act. The qualified opinion now, it means that the financial records are not good and they are not bad. They are just there in the middle. And not so bad that they to warrant the adverse or a disclaimer, but they are not so good to warrant a qualified opinion. A disclaimer opinion is issued when the auditor does not express his opinion about the financial records. Or maybe he wants to limit his reliability and therefore he distances himself from the financial record. He simply does not express his opinion on financial records. The worst one, the worst you can have is adverse. Adverse opinion is the worst. It's a red flag. Okay, it shows that the financial records are in shambles. They do not represent true and fair view of the company, or maybe there's some widespread fraud, or maybe there was lack of cooperation between management and the auditor. Another minor one is simply an emphasis of matter, and it is good to emphasize on this. The emphasis of matter opinion does not affect the overall opinion. It simply means that there is a particular aspect of the financial records or the audit that the auditor wants to bring to the attention of the users of the financial records. Circumstances that can lead to a disclaimer or an qualified opinion or an adverse. There are several, but just to highlight the major ones are if the management try to bribe the auditor, if they threatened him or her, or maybe there is poor valuation of asset, maybe there was poor disclosures, maybe of contingent liabilities, maybe there were no there were in the financial statement there were no provisions maybe for depreciation and bad debts, or maybe there were some instances of fraud, or maybe there was some unexplained income, or maybe there are some financial records that were not included. Maybe there are some subsidiaries whose financial reports were not included in the financial record. Now, what are the effects of bad audit reports? Bad audit reports have wide and far-reaching consequences, and they can lead to the collapse of a business in an instant. Okay, and they include the following. They can lead to the fall of shares in the capital exchange. They can trigger the firing of the entire board of directors. They can lead to forensic audit, as I stated earlier. It can also lead to the loss of credibility with investors. And the worst of all, it can lead to liquidation or a company being going under receivership, or simply it can lead to the closure of business. I hope you have found this video useful, and the next time someone quotes unaudited financial report, you know what they mean and have a clue of what they entail. So if you have found this information useful, please share and comment, and let me know what is your opinion about the opinion of an auditor. In fact, as they say, the audit opinion is the only opinion that counts as far as business is concerned. So until next time, I hope you enjoyed the video.